But I'm just going to start the. Good afternoon, everyone. I'm Jenny Glessman, and I'm with the Sage Hill Community Futures Office and the IBDS program, which is Indigenous Business Development Services. Sage Hill offers loans, advice, and support. We're one of 13 offices across the province that offers this service for small businesses. And one of the things we do in the area of support is workshops and webinars. And so that's like today, preparing for taxes. It's that time of year, beginning of the year, and we all start to rip our hair out as we think about the taxes. So we thought we'd have a session today. We've got Trevor King back with us. Trevor's been with us a number of times. He's from Rostern. So I'm going to just start with, as we gather here today, we acknowledge we are on Treaty 6 territory and the homeland of the Métis. We pay our respects to the First Nation and the Métis ancestors of this place, and we reaffirm our relationships with one another. With that, I'm going to turn it over to you, Trevor. I'm going to let you introduce yourself and your business, and let us start talking about taxes. Also, feel free to, I guess, as we go, unmute, ask questions, or put them in the chat. We'll be going as we go through the presentation. So I'm going to turn it over to Trevor.
Thank you, Jenny, and thank you for the land acknowledgement. So I'm Trevor King. I'm one of the managing partners of Prairie Padgett Tax and Accounting here in Rostern. It's nice to be with all of you today. I want to say this is the third or fourth year I've done Sage Hill presentations. I did one in person. We did some QuickBooks training. I also teach the wonderful GST and PST presentation that everyone really, by the end of it, when we started, everyone's really nervous, but by the end, I think they got a fairly good handle on it. So I'm going to run you guys through small business taxes, as well as we can talk about personal income tax, getting them prepped. This is geared toward the small business owners, sole proprietors, fresh startups, all the way up to if you're incorporated in a partnership. It's all well and good. So I always start my sessions, I always have a question. Can anyone tell me the difference between tax evasion and tax avoidance? I'll give you a minute.
One's legal, one's not.
Which one's which, though, Philip?
Well, tax evasion sounds pretty bad, but tax avoidance means you're just finding the right loopholes.
Points to Philip. You are correct. Tax evasion is illegal, and you should not do it. Tax avoidance, on the other hand, has to deal with planning and use of the tax code as it applies to you. So yes, tax avoidance is legal, but there is some blurry lines between the two. And with that, we're going to start our presentation. Share my screen here. And if anyone has a question, by all means, just put it in the chat or just interrupt me, because I will talk and talk and talk. My previous career, I was a first responder. I can literally, I used to teach other first responders. I can do this for hours. Okay, so Prairie Padgett Tax and Accounting, it's the name of my business. We work out of the Prairie Cove Business Center in beautiful Rostern, right next to the hospital. It's a wonderful blue and white building. If you're ever in town, stop in, say hi. What we're going to run through, I'll do an introduction. Is it deductible? Sale versus resale and how that applies to your business. Capital cost or expense, business expenses, home office, vehicle, which is where a lot of people seem to get into trouble, along with common errors, contractor versus employee, and the importance of keeping appropriate records. Now, I'm one of the managing partners. We use QuickBooks. I'm one of the pro advisor. My junior accountant's also a pro advisor, along with we use Sage and other accounting programs. So what's one question that you guys want answered in the webinar? One thing that you're like, I'm really not sure how this is, or I'm not sure how this works, or what to do. Does anyone have any burning questions? Okay.
Everybody's quiet at the moment. We'll see if they stick something in the chat.
Yeah, no, that's fine. Okay, so, and this is something that has actually changed in the last couple of years. So if you pay your employee a bonus or offer a hiring incentive, is it tax-free? What about Christmas bonuses or long service awards? Does anybody know the answer to that? No? Okay. It's actually,
Someone said up to 500, it is free. It's taxable, someone else said.
yes. Under 500, you can give your employees a gift of up to $500 before it becomes taxable, before it has to be added to your T4. Now, the definition of, is it cash or near cash value? So what that means is, if you hand them $500 in cash, you have to add that to their T4. If it's a straight cash gift, that $500 limit's been removed. Now, if you give them a gift card, not a prepaid Visa, because a prepaid Visa would be considered cash or near cash. If you give them a Tim Hortons gift card, that's fine. That doesn't need to be added to the T4, as well as birthday presents, long service awards, as long as you're like, oh, this was for their birthday, up to $500. Sorry, I should add that part in. Hiring bonuses, hiring incentives, those are all taxable. You have to be added to your T4. Because I can remember getting a hiring bonus, thinking I was going to get this very large check, and it was about 35% less than what I was promised because I had to pay the tax on it. So that is one of the things that have changed, is the birthday and long service awards. That changed January 1st of 22, I believe. And I'll send this presentation to Jenny with the links in it, so she can forward it out if anyone has any more questions. Okay. Continuing on. Capital cost items. So the difference between what I would consider an expense for your business and a capital cost item, are you going to use it for more than a year? That's the big question. I mean, if you're buying something and it's going to be completely depleted within a year, it's not a capital cost item, that's an expense.
Trevor, I've just had one ask if you could speak a little bit louder. They're having a little bit of hard time hearing you.
Okay, I'll move closer to the mic. Is that better?
Okay, perfect.
Sure. Oops.
Thank you.
Man, now I touched the keyboard and we're all over the place. All right, back to capital cost items. So a change in this year, as of December 31st, the immediate expensing program ended. Now, I'm not sure if anyone took advantage of that or had used that program in the past 2 years, but you were able to buy assets for your business, with the exception of buildings and some other structural items, and take the immediate 100% deduction. That was a program by the government in order to get small businesses to invest in their business, right? If you went and bought a new vehicle in the last year, take the write-off, use the 100% deduction for this year, continue on. If you bought any equipment, I definitely encourage you to take the under the immediate expensing program, it's called. It's if you look it up, it's DIEP program. It's excellent. I've had some clients, they were in a position where they had to make considerable capital investments in buying new equipment. Traco, backhoe, that sort of thing. Took advantage of the program, took the 100% deduction, right? And it's easier on their cash flow. Now, what goes into your capital cost? Anything associated with getting that piece of equipment ready to go. What kind of businesses are you guys operating? I mean, I can't see the chat, Jenny, so. And you're muted.
I'm watching. If you guys want to just, oh, we've got a restaurant on here right
Okay.
now. That's all I've got listed so far. Oh, automotive is another one, a consulting business. Service and machine building.
Okay.
Is what we've got so far.
Okay,
So a little bit of everything.
Yeah, you kind of got a mixed bag of businesses there. As far as equipment, so with the exception of consulting, because your equipment needs would be considerably smaller unless you're an engineering consultant and you're buying testing equipment and those kind of things. But those other three, the service and machine, automotive, the restaurant, if you've bought any capital cost items, I'm going to pick on the automotive one, use it as an example. Imagine you bought a lift, right? So you buy a hoist and they run $8,000 to $10,000, and then you have to pay for shipping and you have to have it installed and run wiring to it. All of those costs associated with that item would be considered a capital cost and would go under the capital cost account for that piece of equipment. So everything associated with getting it ready and getting it in place would be added up, and that total amount is your capital cost for that item. So if you made any of those kind of improvements in the last year, take advantage of this immediate expensing program. Take the 100% deduction. There's a lot of, I've had this discussion with a couple accountants that are, we had an annual conference in Montreal this year, and we hashed this out, and there's conflicting ideas, but the overall opinion that one was, $1 today is worth more than $1 in the future because of inflation, right? We're all suffering from those big, heavy inflation hits. So if you can take the deduction now, you're better off. It's actually a more value for your dollar. Okay, do you guys have any questions on capital cost?
Nothing in the chat at the moment.
Okay, you guys can unmute and just kind of chime in if you need to.
There is a question. Must not be a resold item, correct?
Like if you're buying an item for retail purposes to buy and resell, or are you saying if you bought a used item?
This was from Phil. You might have to explain some more, Phil, if you can.
So yeah, if I'm buying a bunch of electronics or equipment, but it's going to go into a machine build, or let's say I'm an electrical contractor and I buy a whole bunch of pipe and conduit and things to fill the truck so that you have a certain supply of screws and nuts and bolts and whatnot.
That'd go into your inventory, Phil.
Okay.
That's an asset, not a capital cost.
Not a capital cost, but the welder that I got to buy, or the electric meter that I have to buy as a tool to do the work.
Yep, or that's a capital cost item, or the truck that it sits in, or the trailer that you pull it on.
Okay.
Those would be capital cost items. Yeah, those other, the other stuff would be material on hand. You would just consider it inventory. Right, like electricians, you guys carry a lot of random extra bits. I have a couple of electrical contractors as clients, and their inventory levels usually, between that $5,000 to $10,000 mark, depending on how much work they're doing, especially if they're in between jobs. Yeah, so those would be inventory items, not capital cost.
So would the expense of tools in the previous year then be good deductions to try to get 100% of? But normally those aren't expenses anyway.
Oh, those are like small tools. What we do is we would group them together and put them in small tools under your CCA schedule. But yeah, I would take the 100% write-off this year.
Okay.
Definitely.
Yeah, I know I do have some more expensive tools, and I'm sure the automotive one, you know, there's, like you said, there's bigger purchases of impacts that ended up get written off, but wasn't sure if it was under capital costs or how they get written off.
So yeah, tools like that, and usually there's a little bit of misconception. I mean, some accountants will say, oh, if it's more than $500, it's capital cost. If it's less than $500, you just expense it. The actual wording is if you're using it for more than one life cycle of your business, so more than 1 year, it should be a capital cost item.
Okay.
But yeah, any of those, especially this year, I mean, any of the tools that you would have bought in the last year, make sure they're all 100% write off under that immediate expensing program, because this program was around for 2 years, and I had a lot of late November, late December conversations with my clients where it was like, oh, we're going to buy a new vac truck in February. Well, if you're going to buy one, buy it before the end of the year because this program's ending. Oh, okay. Yep. You know, that's you're better off to take the savings now. Okay. Any other questions around capital cost?
I think we're good at the
Okay.
moment.
All right. So business expenses. Have anyone ever seen that skit from Schitt's Creek where they say it's a write-off? Right? You buy something for your business and then you write it off. Who writes it off? Well, I don't know. The write-off people. The government pays you back for it. That's not how business write-off works. So definition of expense, according to CRA, is any reasonable current expense you paid or have to pay in order to earn business income. Now, what does that mean? Inventory, like we just discussed with Philip, inventory that you buy to operate your business is not considered a deduction. It's an asset that you have until you use it. You need to do inventory adjustments at the end of the year. Now, this is the question I'm going to ask the group. If you donate a product to a charity or nonprofit, how does that deduction work? Say I'm an artist and I value a painting at $500 and I donate it to Jenny. I say, here, Jenny, here's my contribution. Auction off this painting. What am I allowed to write off? Anybody? Do you think I get to write off the $500 the painting I put the value of the painting at?
I'm going to guess no.
Yeah, you'd be right. Because you can write off any associated expense with it. So the framing, the matting, if I had someone else frame it, those sorts of things. But the actual time that I put into something is not an allowable expense if you donate it. You will definitely get into trouble with CRA if you start doing things like that.
Would you consider that part of your advertising budget?
You could use it as advertising. Again, you would only be allowed to write off the materials that went into it, not your time.
So I'm going to give an example. My husband and I own a lumber yard, and the hockey teams are coming in regularly for things for their tournaments. So I donate one of my giftware items. I can only expense it or put it in as an expense for what it costs me to buy it, not what I would sell it for on the shelf. Is that right?
That is correct.
Okay.
Yeah, it's the same thing as like we have several community, like we sponsor 4-H.
Mhm.
Every year they come around and every year we cut them a check, right? But you're only allowed to you're only allowed to write off what it actually costs you. So for that instance, Philip, yeah, I do put that under my donations or advertising. Like if I'm getting a sign in exchange, you know, that's why lots of charity golf tournaments always have signs up for their donors so they can claim it's advertising. It's kind of a useful little thing. Okay, so if you're donating stuff, you're only allowed to write off what it actually costs you. It does get kind of frustrating for clients, especially if you put a lot of time and effort into something. You can't write off your time, like, you know, you can't really put a dollar value on your time in that instance versus a retail operation like Jenny, where she buys a product for X amount and then can donate it and write off that portion. So where are we here? Common business expenses. So we just went over advertising. Meals and entertainment are only a 50% deduction. And that is, it's been that way for a considerable amount of time. The only exception to that is if you're a long haul truck driver, then the rates change. Then the rates are closer to 80%. With that being said, if you're taking a client out, especially if you're in the consulting industry, take clients out for meals. What I have my clients do is write on the back of the receipt who you took out, right? What the client actually is. Because if you ever get audited and the CRA says, oh man, you certainly go to a lot of fancy restaurants, you can say, well, this is for this client, this is for client B, this is for client C, this is the meeting we had. Just write on the back of the receipt. That way it's easy to keep track of and throw them all in a folder together. Subcontractors is something we're going to talk about later in the presentation because there have been not some changes, but there have been CRA is closely looking at what is a subcontractor versus what is an employee and what is the difference, right? And it's gone from anyone who worked for you, you could be a subcontractor, to now there are actually parameters that they want you to follow. So these common business expenses, by no means is this an exhaustive list. These are kind of the big ones. Can anyone explain to me what a bad debt is? Anyone know what that term means?
I'm thinking it has something to do with a contract, or if you've gotten a deposit on something and then they never went through with it, and then you have no way of collecting on the rest of that invoice.
You would be correct. It's clients, if you have no reasonable expectation of collecting, say they've gone bankrupt, they've disappeared, you've gone and completed the work, you've issued the invoice, they never came back, won't answer your calls. How do you track that? Do you just walk away? No, you can write that off as a bad debt, right? And that's deductible against your income. Now, where it gets tricky is I had a client that just disappeared. We did quite a bit of work for them, and usually, you know, we get a retainer up front, but this has been an ongoing client, and then they just disappeared. No response, phone call, email, letter, nothing, just gone. All right, well, comes to your end, and we're going through the receivables, and oh man, they haven't. Like, you know, it's been like 14 months. Write it off as a bad debt. File our corporate return. And 6 months later, client shows up in my office. I owe you some money. Okay. So then you have to go back and reverse that entry and then claim the income in the current year. Nope, thought that was a question. So by all means, you can and you should write off bad debts. take them off your accounts receivable, get them off your books, take the deduction. But be fairly certain that they're not going to come back. And if they do come back, you do have to claim the income. It's not like you can pretend it's free money. You know, the government's going to get their portion one way or the other. But
There is a
that's one of
question.
Oh,
There is a question around that. So is it, can you write off it at 100% of what the bad debt is?
yes.
That's the question in the chat. Okay.
Yes. But make sure that it's, I'm gonna preface that with, make sure it is a legitimate client and you're not inventing bad debts to decrease your taxable income. Because you're gonna find out the hard way how really ruthless CRA can be.
I have an example there. I have someone that actually he passed away. We sent it to the estate and there was not enough funds to cover. So it's been sitting on our books for a couple of years. So I can write that off.
You betcha.
Okay.
Yep. Take it off your books because otherwise it's going to sit in your receivables.
Yeah.
Right.
Okay.
You don't use bad debt, or so if I have an invoice from 2023,
Yep.
but it doesn't get paid until 2024, that's not necessarily bad debt.
No, that's an account receivable.
Okay, so how do you deal with that where you've got expenses and or work done in the previous year, but I'm guessing since the invoice isn't being paid till 24, it follows the invoice payment kind of date?
That is correct.
Okay.
Unless for sole proprietorships, that's the easiest way to do it. You can do a percentage of completion, but I would just,
Okay.
when you file your taxes, I would just leave it as work in progress.
Yep.
And have it as an account receivable.
Perfect.
Nope, that's what I would do there. All right, the next, and this one is something, home office expenses, right? Especially when businesses are new and you're starting out, very few businesses go from, I have this idea for a business to I'm incorporated and I have an office building, right? It's never a huge jump like that. Sometimes you do, but more often than not, you're going to start as a sole proprietor. You're going to be working out of your house, you're going to be working out of your garage or however that works. So home office expenses. How do I claim that? There is, depending on how you file your taxes, whether you do it yourself or you have someone do it for you, whatever portion of your home that you use for your business. Now, I always want clients to, if they have the space, you have a dedicated office, that office is only used for your business. Then you take the square footage of that, divide it into the square footage of your house, say it works out to be 8%. Then 8% of all the costs associated with maintaining your home, interest on your mortgage, taxes, insurance, repairs, utilities, become part of your home office expense. I do have one client who's, oh, I use my kitchen table. Okay, so then we have to figure out what percentage during the day. It can become very complicated very fast. So I always recommend, if you can, use a spare bedroom. If you don't have, I'm limited on space, I got to use my kitchen table. Figure out what percentage of the day you spend working at your kitchen table and use that divided into the square footage. It'll be a smaller number than a dedicated room, but at least you'll still get somewhat of a deduction. Now, mortgage principal payments are not eligible. Just the interest portion, not the principal payment, okay?
There is a question around this too. Is there a max percentage that you can deduct for a home office expense?
How big is your office? Like, can you deduct 95% of your, no. Like, that being said, if you use, say you use a portion of your garage as well as an office inside, and then yeah, measure the square footage. As far as, is there a maximum amount you can claim? It has to be reasonable and justifiable. And you have to be able, if you get audited, you have to be able to say, oh no, I spend, I use 95% of my house for my business. It's not going to fly. Right? You can say, oh, well, this is where the company vehicle sits inside. Here's the square footage divided by the square footage of the garage. Here's how big my home office is. Here's the square footage versus the square footage of my house. Question? Nope. Okay. Right. Speaking of vehicles, has anyone had their mileage log audited? No?
No, but I've heard they're doing it lots.
Yes, they are. Yes. I've had a client who had their mileage log audited, and they kept everything in a little date minder book. And all we did was we pulled the spine out of it was one of those coil bound ones. We pulled the spine out and we put it in I had a big commercial copier at the office. We scanned it all to them, sent it in. Every page, right? Because they'd kept track, but that's all you need. If you don't use a vehicle 100% for business, and I will explain that a little further. So you need to keep track of your kilometers driven. I usually write your start K and your NK, where you went and why, and well as anything else that doesn't have a justifiable trip. That's considered personal mileage and is non-deductible. Purchase price of your vehicle is a capital cost item. Leasing is 100% deduction, but then you get into the trap of leasing a vehicle. Don't lease a vehicle just to have it as a business expense. Make sure it's actually financially responsible. You can use apps. There's lots of mileage tracker apps. QuickBooks has one. There's a whole bunch of them. As long as you're tracking your mileage, what you drove for your business, everything else is personal, and you figure out the percentage at the end of the year. It's just like a home office expense. It's the same theory. And it is much easier to just keep accurate records throughout the year. Because if you ever have to go back and be like, oh, sure, I used my truck 35% for my business, but you can't justify it, you're going to get denied and reassessed. Now, the 100% business use thing. It's really difficult to justify if you only have one vehicle. As in, it's not going to fly. Right? If you have a dedicated vehicle, like Philip, you're an electrical contractor.
Kind of. I do have just a personal vehicle, so it's not like an electrical truck or a plumbing truck.
Okay.
It's my personal vehicle. But what I've done is I've gone with MileIQ app, and I'm incorporated because the first year it was nothing but a hassle for me to keep receipts on everything on the vehicle. I had a company license plate. I had different things like that. So I have now transferred that company license plate to my own name. I use my own vehicle and I charge 52 cents for the first 5,000. And then, so there's the CRA approved amount for deductions that I use that. That cleared a lot.
Using the medical mileage, the 52 cents a kilometer for the first 5,000?
Not medical. In the CRA, it shows the first 5,000 kilometers for business is at 52 cents or something like that. And then the following kilometers are at a different amount. And that changes every year, and that's in CRA for vehicle mileage.
Yeah, it changes depending on where you live too.
Yeah, if you're up north and the gas is more or whatnot.
Yeah.
So with my MileIQ app, I am automatically kind of eliminating or setting up, even if it was somebody who's doing it the other way and keeping all the receipts and maintenance bills. this, to my understanding, is just the flat amount you're allowed to claim, and it's not taxable um, for mileage. And I have to keep an app of which ones were business travel and which ones weren't. So a lot of my contracting jobs, I run from St. Brew to Saskatoon, or I run from St. Brew to PA, or High Level, or even Meadow Lake. So there's a large number of work-related trips.
Okay.
I do find that that app makes it a lot easier because you just go online, say, yep, that was for business, that was me going to get groceries, that was personal, and then vice versa.
So
That seems to have helped me. So,
the vehicle's in your personal name?
yep,
Okay, yeah, and then you just bill the company for your mileage, right? Your corporation, you bill them for the mileage?
yep. And there's an automatic set rate in the CRA for how much they can pay me for the mileage that's documented.
Yeah, that's for a personal to corporation, that's an appropriate way to do it.
Okay.
If you're not incorporated, you kind of gotta you could still use the app to actually track all your mileage.
Yeah.
That'd work well. Then you have an accurate record.
Yeah.
But yes, Jenny, to answer your question, CRA is looking very closely at mileage deductions. I mean, it seems like the pandemic hit in 2020, and then for tax years 2021 and 2022, it was like a free for all. You know, they didn't look too closely at anything. But now everyone's back to work, and I feel like the government coffers are empty, so they're looking to refill them a little bit. So they're looking very closely at what we're claiming for deductions here. So as long as you can justify it and back it up, I mean, I have a personal vehicle that's in my personal name that running my kids to soccer and into Saskatoon for jujitsu and those sorts of things. And then I have a company vehicle that, when I have to go and meet clients, or we're going for meetings or anything, we take the company vehicle. But you have to have those very clear definitions when you're claiming 100% deduction. In my instance, mine is in a corporation, so it's a company car that way.
Are
All
you
right.
also getting nailed for, because the reason I did this change is because I originally swapped my car to be the company's car,
Mhm.
sold them the car, put the license plates on. But the problem I had is that they also wanted to tax me personally on the availability and the benefit of the company having a vehicle for me.
Yeah.
And that got
I
into
mean,
a whole gray area, and I was like, I still have to keep all the receipts and everything else. So I just went with you just pay me for mileage and I'll take care of the vehicle.
yeah, it's for that instance, yes, there is the availability factor, as well as if you drive it on personal miles, it has to be added to, it's considered a taxable benefit.
I did not like that.
It can be, where's the vehicle sitting? I leave it at the office.
My office is at my house, so technically then they want it
Yeah,
as, oh, you have 100% availability of it, so you got to get taxed a whole lot more. I'm like, well, it's my car. I can't really leave it at the office because the
yeah,
office
and
is my home. So,
and,
but
and that's what I mean is it can get really complicated really fast
yeah.
with personal use vehicles. Okay. Now, Jenny, you're muted.
That's why we always suggest to clients to, if anything, at least keep the little book in the glove box where you keep writing it down. So at least you've got something. And Phil, would you mind putting the name of that app? Someone was asking in the chat.
Yeah, it's Mile IQ.
Yeah,
Okay.
My IQ Canada or myliq.ca and I think it cost me $16 for the year or something. But
Perfect.
it basically tracks your phone.
Yeah. Well, I mean, your phone's tracked anywhere you
Your
go.
phone is
Anyway.
tracking, and yeah, so but
Perfect.
That's
Thank you.
$16 a year is cheap.
And I
getting
actually
audited.
use it. I end up using it for if I get called on a service call and I forget what time I went to work or what time I left the company. It's great for going back on that when you're filling out the invoices. Was I there at 7:30? Was I there at 8:30? You know, a week later when you're getting service calls, it's helpful.
Yeah, that's, I mean, accurate record keeping is, I'm gonna say probably 50% of the stress in a business is keeping accurate records of everything. And those monotonous, boring filing your GST and PST and making sure your invoicing is correct. It is like sucks all the fun out of working for yourself. Okay. Those self-employed individuals, you have to pay CPP and you get the fun part of paying both portions. So it's almost 12% right off the top of anything you made. Yeah, sucks. With that, I mean, you do get your CPP back eventually when you retire and you qualify for CPP benefits and they pay it into you. Now, being self-employed and qualifying for EI, yes, you do qualify, but you do have to apply and register and then remit your EI premiums. If you claim for a year, or if you make your payments for a year, then you're eligible for sickness and maternity and paternity benefits as a self-employed individual. But the benefit of that is you only have to pay your portion. Yeah. Does anybody have any questions?
Nothing at the moment that I
No.
can see.
This is the big thing that my especially new clients I have that are new sole proprietors come in and we do their income tax and we work everything out and they say, wow, why do I have to pay so much? And 90% of the time it's mostly CPP. The only way, not a way around it, but the only way to not have to pay CPP is to go the route of incorporating and then drawing a dividend. Dividends aren't subject to CPP and EI, but then you have to have that conversation with that client and say, if you're drawing a dividend, you are not saving anything for retirement, so you need to have a separate amount put aside or you're going to have to work forever. Right, because when you go to draw CPP, especially if you incorporate early in life, there's going to be nothing there because you haven't contributed at all. Right, and this is something that every sole proprietorship gets hit with. There's no way around it. Expect to pay 12% CPP to the max of 77, 35, 90 this year. Goes up every year because they've got to contribute more and more. All right. Now, contractor versus employee. This is something that is being looked at very closely, especially with the side hustle, the rise of side hustles, and the gig marketplace, and those sorts of things. Companies want to say, "Oh, we'll pay you as a contractor," because then they don't have to pay their portion of CPP or EI or put you on their WCB. So if you have an employee and you just want to pay them a flat rate, it's not how it works. You have to deduct and remit payroll taxes. You got to pay your portion of CPP and EI as a business owner. Now, the definitions of an employee, if you set their hours, right, you tell them where and when to be there, you provide all the tools for them, they work exclusively for you. Like my junior accountant, I tell her how many hours a week I need help. She comes to my place of work. I provide her with a computer, training, office, desk, all that sorts of things. She only works for me. She's an employee. Versus, we have a cleaning service that looks after our office. And I just say, we need our office cleaned twice a week. They bring all their own stuff in. They bill me for it. They're a contractor. Right? A lot of, and this especially happens in the trades industry. This is I'm trying to think of it. I have there's a company, they do exterior installations like siding, exterior finishes on houses, and they're like, oh wow, I pay these guys by the hour, but you know, they're subcontractors. No, if you're paying them by the hour, they're not a subcontractor, they're an employee, right? You provide them the truck to come to site with, you give them all the tools to install the material, they're an employee. Like, it's not that much work, it's not that much more money to get on the right side of what's legal. Pay your employees like they need to be paid. Make the remittances, make your deductions. There's lots of cheap payroll programs out there. Excel will even calculate your payroll for you. There's a payroll function in there. Make sure you're making your remittances by the 15th of the month. Continue on your way, because, and this is what's happened in the past, is CRA has come back and said, you know, that subcontractor you've been paying for the last 3 years, well, they're actually an employee, so you're going to have to cover your portion and their portion of all the deductions you haven't paid. It'll all fall back on the employer.
We have a question in the chat.
Sure.
What if I occasionally get my son to help, like paint or, you know, go get something?
Occasionally, they would be considered like a casual labor. I guess the question becomes is, when you're hiring family, are they working enough that it would be considered gainful employment? And you have to put them on payroll, or, you know, I just give them $20 to do one occasional job here and there. If they're not working for you on a regular basis, if it's very piecemeal work, that's where you get into the blurred lines of, especially with family, because hiring family can be questioned more so than hiring an outside person. But yeah, you could use that as casual labor and not have to put them on payroll. But if they are regularly reporting to work, has set hours, so under this criteria, they wouldn't actually fit into that. They would be considered a subcontractor.
And what's written here is he's got petty cash, piecemeal expense.
I wouldn't pay them out of petty cash, because petty cash is like a catch-all for money just flowing out the door. That's not, I don't like that. The way petty cash was set up originally, it was for like an office building. If they had to run out before we had like debit cards and credit cards, they had to run out and get something. They would take the petty cash out and then put the receipt in, and then the petty cash would be replenished at the end of the month and entered into the associated expenses. And the petty cash is kept as an asset on the balance sheet. That's where that comes from. But yeah, I would just write it off as casual labor if they're not regularly working for you. But I mean, the definition of regular, like, I would say if they're working for you on a weekly basis or even a monthly basis, it's not casual anymore. That's an employee. Like, get them on payroll, do it right. Odds are they'll be under the minimum threshold, so they won't pay any income tax anyways. It's just, it seems like it's a lot of work to do, but trust me, it's way less work than defending yourself to the CRA. Okay. Paying your family, that's deductible, right? And this is something that
Gotta love how that question led into that.
I know, right? It worked out. It's almost like I'm really lucky the way this worked out. So, yes, paying your family is deductible, provided some conditions are met. And there is a very strict set of conditions that CRA lays out. So you have to actually pay them. Oh, you can't claim you paid them right off the expense, put it in as a payroll, and not actually cut them a check. Not how that works. They have to do the work, right? You can't say, oh, I pay my 2-year-old to look after the grounds at our building and shovel the snow and mow the lawn. Like, not, they're not doing the work. Work has to be necessary for the operation of the business, right? It wouldn't be, trying to think of an example of what wouldn't be legitimate.
I'm
It
guessing
wouldn't,
you can't pay them to wash your car.
no, you cannot pay them to wash your car. I was gonna say, can't pay my kids to sort the recycling in my office, right? Like those kind of things. Yeah, I can't pay them to wash my car. Although if they had a car wash, that would be a different sort of thing. So the salary has to be reasonable with what the employee is doing relative to their age. Example, employing children. I can't pay my 10-year-old 80 grand a year to clean my office. Right? That's inappropriate and ridiculous. You got to register for your payroll account and make your remittance for CPP and EI. And this also has to be a job that you would have hired someone else for. Right? Like if he wasn't my, I have an assistant, but if they weren't my family member, I wouldn't have hired them. Then it's not justifiable. So you can get away with paying your family a salary, especially you want to get into generational businesses. Family farms are often structured like this. Yeah, they can be an employee, especially now that lots of family farms have moved to their corporate structure. Put them on a salary, pay them on payroll. It's fine if mom and dad are the primary shareholders, as long as they're doing the work. It's necessary for the operations. It's a reasonable salary, commensurate with their age. And typically, children need to be, I think the Young Workers Program is 14, if I'm not mistaken. They have to take a Young Workers Training Program, and that has to be documented and completed before they start working for you. There are exemptions for farming operations. I know the rules are different. It seems like farmers get away with whatever they want. But there are some exemptions around that. Typically, it's 16 before you can pay them if they don't have the Young Workers Program. Right. This is a lot. This slide is a lot of information to digest. Does anyone have any questions regarding it?
The only
There
thing
is a,
I have, sorry if I'm cutting somebody off.
Nope.
Since I'm not sole proprietor, I'm a corporation and it's work that I would have done anyway. But I pay myself a dividend or whatever every so often whenever I can afford it.
Yep.
But if I then take some of that money out of my dividend to pay my son or whatever, only because I have no employees. I'm the sole shareholder. I'm the only contractor. I don't pay myself a salary.
Yeah, you're avoiding that 12% CPP hit.
Yeah, so if I do get him, I'm guessing I'm better off just expensing what I would have paid him to do.
Yeah,
Or,
I mean, yeah, I would pay him. I wouldn't pay him out of your dividend amount. I'd pay him direct from the company.
okay, and then
Yeah.
use that as an expense for what I paid, for instance, if he had to paint a fence for the guarding on a robot cell or something. Anyway, just
Yeah, for that, for instance, yeah, I would pay him out of the company account.
okay.
Yeah, as a casual labor
Yeah,
subcontractor,
but
whatever, however you
when
want
you
to.
mentioned here that he has to be registered under payroll, I
It's
don't have
only-
anybody on payroll.
Yeah, that's only, I mean, for your instance, that's a occasional thing,
Yeah.
one time sort of deal.
Yep,
That's fine. But I mean, if he was accompanying you every week to do installations, then that's
that'd be a
different. Then
problem. Yeah,
that's
absolutely.
well, it wouldn't be a problem. It would just be an employee. I mean,
Yeah, I would just want to make sure he's also covered to make sure he's on the WCB and everything and all that good stuff. And I do
Yeah.
carry WCB for myself anyway, so. But
yeah. So that's the thing, is that's kind of the benefit. I mean, when you're hiring, especially your family members, yeah, you want to make sure they're insured.
Yeah.
You want to make sure that
covered. Yep.
WCB is in place. Yeah. And I
Sure.
mean, it's that time of year where we have to do the salary submissions for the WCB rates. That's usually they're due by the end of January. Yep, Jenny's nodding her head.
Yes, just got that letter in the mail.
Yep, it's that time of year.
Okay, thank you.
All right. Outsourcing. This is kind of this kind of goes hand in hand with employees and subcontractors and what exactly constitutes outsourcing. So things you got to ask yourself, when you're considering outsourcing, is there a cost savings? Can I meet the demand I currently have? Is there time savings to focus on your business demand? And are you any further ahead to do it yourself? I'm going to give you an example that worked for me personally, right? So we have our office is 3,200 square feet inside. It's a converted medical clinic, and there's a whole. It's a what's the word I'm looking for? It's a small business hub. Like we have a whole bunch of. It's like a starter cell when you need to make that jump from I'm working in my home office to now I need a professional setting. We have office space available, individual offices in our building. Business incubator, that's the word I'm looking for. So anyways, we wanted to upgrade all the lighting in our business incubator, right? Okay, so price out LED lights, and you're thinking about it. And I'm like, well, pretty handy guy. I could change all those lights myself. And then I actually sat down and thought about it. How many hours is it going to take me to change all these lights versus to just hire an electrician to do it? And it was cheaper for us in the long run to outsource it, because that 12 or 14 hours I would have spent changing light fixtures, I can work on client work and actually be further ahead after paying my contractor. So that's probably the easiest real world example I can come up with. It's like building a website, right? There's lots of intuitive programs to build websites. GoDaddy has a really good website building platform, but if you have work piling up because you're playing around building a website and that's not your bag of tricks, find someone and outsource it. There's lots of great places to outsource stuff to. Sage Hills will have a list of businesses you can outsource things to, your local chamber of commerce. You go online and use Upwork. That being said, their program has changed a little bit. You have to pay to find help now, so that's not as good as it used to be. But yeah, sometimes, honestly, you're further ahead to outsource it. As much as, especially when your business first starts out, you have to do everything yourself because you're A, strapped for cash, and B, you're trying to get everything in place, and C, you're probably kind of a little bit of a control freak, so you want to make sure that everything is done to your standard. As your business grows and you take on more and more work, we went through this 2 years ago. 2 years ago this January, actually. I hired a junior accountant to help me because I couldn't do all the work myself. And now I'd never go back. I'd never go back to not having her. She does everything for me. Data entry, bookkeeping, manages my calendar for me. We're bringing on another bookkeeper early February, once she's done her training program. Like sometimes you do need to just outsource stuff or hire help. You'd be way further ahead in your business. That's my bit for growing your business. Sometimes you need to outsource stuff. Now, record keeping. I have seen record keeping with everything from paper ledgers, old school dual entry ledgers, great big books. Works great, works for the client. That's perfect. Lots of clients use QuickBooks. Very easy. Excel. I've seen clients who keep all the receipts in the glove compartment of their truck. When they come in for tax time and they say, hey, do you got a bag? They go out to their truck and they dig all the receipts out of the consoles and out of the glove box and put them all in a bag. That is not how you want to keep your records. But some businesses, you know, it's a struggle for them. I recommend, if you're not good with computers or you're not careful with how you keep receipts, get one of those file folder boxes with a plastic lid on it. Make your categories, throw your receipts in the appropriate category. If you do your taxes yourself, you add them all up at the end of the year. If you don't, your accountant will thank you, because everything is together in nice little folders. All they got to do is go through. They can pull out your GST if you're a GST registrant. That's great. How you organize depends a lot on your personality. If you're like me and you have a very strong OCD background, I use QuickBooks, runs all of my bookkeeping stuff. It's reconciled every month. It makes me happy when everything's balanced. When things don't balance, it really irritates me. So I use electronic bookkeeping. You don't need expensive software. Excel works. And for the length of time you have to keep records, it's 7 years from the date of filing, not from the date it was due. Now, what does that mean? Okay, so I've had clients who they just don't file their taxes. Come in and, oh, you know, I'm 8 years behind. I'm 11 years behind. File their returns. Doesn't mean that, oh, that return was more than 7 years ago. It doesn't count. No, it's 7 years from the date that that tax return was filed. You can get rid of the receipts. Not from the date it was due. It's two very different things. That being said, with regards to record keeping, if you're not good at it and your business is growing to the point where you can't keep up with all of your books, hire help. I say this to lots of clients. It's way easier to hire a bookkeeper early in the year than to come to my office in, you know, April 26th with a bag of receipts saying, can you help me with this? Because it's really not going to end well. Much cheaper to be organized up front. Okay, questions?
Yes, there's a couple of questions. One is, where do you find a bookkeeper?
In Rostern.
I was just gonna say.
There's where you find a bookkeeper. There's your Chamber of Commerce should have a listing for a bookkeeper. Really, there's lots of bookkeeping firms. I would look for someone. Actually, we're gonna my next slide kind of ties into that question. So when you're hiring professional help, questions you got to ask. What's your experience? What's your background? Can I talk to you year round? This applies to especially to accounting firms if you're using like H&R Block, Liberty Tax, those kind of places where they're not there year round. You know, that kind of, you know, if you need an answer in September about your business, it's really tough to wait until tax time to get a hold of them. What exactly am I getting from you? What are my responsibilities? So what that means is every client that we have an engagement letter with, like not my T4 clients that just come in for their taxes, that's every year they come in, they provide us with the information, you know, we do the return. But on my ongoing monthly clients, there's this letter that we have that I use, and it clearly defines these are my jobs, right? And there's, you know, list of 4 or 5. And these are what you're responsible for. You're responsible for giving me the bank statements and the receipts by this date. Have that all clearly laid out. Who's doing what? Who's filing GST? Are you filing GST? Am I filing GST? Who's doing payroll remittance? You know, all of those things, because if you don't know, and I mean, you're the business owner, ultimately you're responsible. Other questions to ask: are you registered with CRA? Now, what does that mean? Do they have a rep ID number? All right, authorization to represent you. And this is the big one. If I get audited, will you defend me? Right? So if you get audited, who's talking to the CRA? Who's doing the negotiation? Who's taking the meetings? Who's finding the documents? All discussions you need to have with whoever you're using for professional help before you get too far into that agreement. What am I? Oh, I'm 2 minutes over. Man.
That was really good information, this last slide. I'm gonna take a copy of that and make sure we give it to some of our clients.
Well, and this is like, I have a lot of clients that have come to me, and I'm not your how can I explain this? I'm not your stereotypical accountant, right? I'm very, I can, and I say this to all my clients up front, I can come off as very abrupt and very aggressive. But we need to have these discussions up front, right? And don't be and I mean, when you hire professional help, keep in mind that, you know, you should be able to call them and ask questions, and they should be able to answer your questions. You're the one footing the bill for the help. They work for you. Keep that in mind. Right? All now, almost, you know, every year I can almost get it to an hour, Jenny. Almost.
That's okay. We had lots of questions, so you're okay.
Yeah.
And I did
so
notice. You go ahead. Sorry.
Here's my email. If you have a question that you weren't comfortable asking, privacy reasons, or you're like, oh, I'm worried it's a dumb question. No such thing as a dumb question. No. Right. Happy to answer questions. I'm not sending you a bill to answer your questions. This is something that I do because I think small businesses, they need a leg up when they're first starting. That's why I like working with Sage Hill. They're really a good resource. And if you need an appointment, you're like, oh, you know, I want to sit down and I want to talk with you. My junior accountant email address is right there. She runs my schedule. So she will get you an appointment with me. Okay.
Awesome. There was one question that I missed in the chat as we were going. It was back around considering if someone is an employee, even if they only work half an hour to an hour a month, is that considered an employee?
If they're working half an hour to an hour every month, yeah, I would consider them an employee.
Okay. Perfect.
Right, because it's consistent work. Means if it's half an hour to an hour a year, or half an hour to an hour a quarter, I wouldn't worry too much about it. But if it's every month, like, it's not that much work to set up payroll accounts. It's really not. And if you have questions, I don't know where to go for payroll accounts, fire me your question. I can send you some information. It's not like pulling teeth. It's really not that bad. Okay, you just got to make sure you get everything set up, and then you continue on your way. Use it for stuff like that. Use the Excel payroll calculation program. It's free. Most of you have Excel anyways, right? You don't need to buy a QuickBooks payroll subscription for, you know, that'll run you like $35 a month. Don't do that. Just use Excel. Right? Save yourself some money. Okay. Guys, got any other questions on anything we talked about?
Yeah, I was just going to say, does anyone have any other questions? I know we've ran over a little bit. This is always such a hot topic. And if not, I'd like to thank everybody for joining us on behalf of Trevor and Sage Hill and the IBDS. This has been great, and we will definitely be touching on this topic again, because I know there's always lots of questions around, and it's always changing too. You know, some of the things, there's always new things.
Yeah, the rules, you know, CRA likes to send out their information circulars kind of secretively. It's not really well published, but you know, income tax time, it's like, bam, there you go.
There you go. Great.
Is there maybe plan for a QuickBooks kind of, the fact that you're a pro trainer or whatnot, or how would somebody go about getting more exposure to QuickBooks, or is maybe Sage Hill gonna put something on?
That's a good one, Phil. We're always looking, and that's one thing I'm going to remind everybody. There is a survey that will pop up at the end of this. We're always looking for ideas for different training sessions. So I've wrote down QuickBooks with a big circle. So maybe that's one we should have a session on, because I know lots of small business owners are using it. So I might have to talk to Trevor about that one.
Well, and QuickBooks actually has an AI engine inside of it. As much it's not the Terminator, it's just a learning program, right? It'll take the information you give it, and you can set up your rules within QuickBooks so it cuts your bookkeeping time by 75-80% versus manual entry bookkeeping. It's pretty
Sometimes I find it nicer just to talk to a live voice, so having access to Trevor here, maybe I gotta set something up
there you go.
next time I'm in Austin.
Email Rhonda and we'll set up. I always got coffee on.
Awesome.
Come in, sit down.
Sounds
Thanks
great.
again.
Thanks everybody for joining us. This has been great. I will be, like I said, there is a survey that's going to pop up. Please take a few minutes to fill that out. And we also will be sending out Trevor's presentation. And we've also recorded today's session, and we'll make sure that everybody gets the link so that you can always watch that again as well. With that, have a great afternoon, everybody, and a great rest of the week. And hopefully we don't all get snowed in.